The markets might open this week under significant pressure after major geopolitical developments in the Middle East. U.S. and Israeli strikes targeted Iran, resulting in the reported death of the supreme leader, followed by Iranian retaliation, including missile strikes on U.S. bases and threats to shipping lanes. This escalation immediately disrupts expectations for global oil supply. Tanker owners have suspended shipments through the Strait of Hormuz, while Saudi Arabia and the UAE have attempted to boost exports preemptively. The result is elevated volatility across energy markets. For swing traders, this creates clear opportunities in the energy complex, particularly the names that we're going to go over, like ExxonMobil, Chevron, Halliburton, Valero, MPC, LNG, and Kinder Morgan, KMI, where we may see short-term momentum on supply concerns, but also the need for tight risk management given the potential for rapid de-escalation. This is why we always must size positions appropriately in these environments. At the same time, the conflict is driving safe haven flows. Gold, silver are seeing strong investment demand overall, and this macro backdrop supports precious metal exposure as a hedge while we navigate risk-off sentiment. So that is a potential. We'll go up over the charts shortly. On the tech and AI side, the news adds layers of uncertainty. China's condemnation of the strikes and renewed tensions in the South China Sea raise the possibility of further supply chain friction in semiconductors and rare earths. Nvidia has already seen some pressure from these jitters combined with broader AI cost concerns, while Meta's major GPU purchase from AMD highlights ongoing long-term demand for data center infrastructure. This divergence within the AI ecosystem is worth watching closely for swing trade setups, favoring names in clear order momentum over those that are exposed to tariff or logistic risks. Also, defense names such as LMT, NOC, RTX, and GE are all seeing renewed interest as geopolitical premiums rise, creating potential rotational opportunities away from the high beta tech. Again, these are names that I track and trade. We will go over these in today's video. So looking ahead, we do have some key data points that will shape this week. We have Broadcom reports earning on March 4th, which will focus on AI demand. And then we also have March 6th jobs report and retail sales data. So these will test rate cut expectations amid the new inflation risk from energy prices. We shall actually see how things play out, but just trying to think ahead long-term macro-wise. So with that macro context in mind, let's dive into the charts. Okay. Here, firstly, we're looking at the flows of the week for the sectors. You can see, looking up, XLF financials got hit. They're not looking too good. We'll look at the chart real quick. And then XLK also continues not to be advantageous. Where's money flowing to? XLV up 2% on the week. XLP 2.66% on the week. XLU 2.7% on the week. Materials 1.75% on the week. Again, the point is tech is not the place to be right now. It's not advantageous to be there. And without tech moving, the market is going to continue to chop sideways, most likely like this. Okay, it's not doing anything. We close below the 50 again, but that doesn't matter. The market doesn't care about EMAs and trend lines right now. It's more so just within range. So use these levels. Maybe you can, if you're a range trader, this is a pretty decent environment for you. If you're a swing trader, this is terrible. You're getting chopped up if you're trying to trade this stuff. RSP looks pretty good. This is the equally weighted, so it takes out the weight, the heavy tech weight. That is, what was it? What I just showed you is 32%, right? 32.1%. Here are the weightings of this. So this is why if tech doesn't move, the market's not going to move, or at least the odds are extremely low that it will move. Now with tech going down, financials going down, with this type of look, financials got hit. It broke this potential support area. It's coming back in the range, but it's got to hold here. If it breaks these 49.50 lows and we potentially continue on down to 42, maybe 45, either way, with the top two sectors, i.e. tech and XLF financials at 32 and 14% of the weight of the SPY, if those go down, the market is going to have a very hard time going up. So this is a stock picker's environment. Let's look at the NDX. Cash index for the Qs. Again, chopping around. The story is the same. It's not doing anything. It's staying within, we can put this range here now. It's a pretty obvious range that it is staying in short-term wise, and then it has some longer-term ranges, but it's not doing anything, right? It's not doing anything. The Dow closed below the 50 EMA. I don't know if you care about that, but overall, it's not doing anything. So let's look at these names that actually matter, that might actually be moving. Let's look at Bitcoin first, though. Again, not really doing anything. It undercut this area here. It broke this down trend line, so I'll adjust this to a potential supply area, but you can see Bitcoin again in range. Let's move on. This is my universe, the stocks that I track and trade daily. Microsoft, look at this. I don't think after being 30% off the all-time highs, it's advantageous to short down here. You kind of missed the move. Could it go lower? Absolutely. Could it get this gap fill at 367.77? Yeah, I think it could. Would I take a trade on it? Potentially, but it'd be very short term, not long term, because it's not the most advantageous to be. Nvidia, maybe it gets to the 200 EMA. I do have alert on there for a short term bounce. Maybe it continues down to 164. It's just chopping your range, not advantageous to be. Apple getting hit, downtrend line, making lower highs, but also higher lows. So it's kind of wedging. If you want to, draw some lines there, you can, but not advantageous to be there. Amazon has been interesting. I am looking for this gap fill. I do think it can happen on some market strength. Is this the week that it does so? I'm not too confident on that. It could roll over and continue on down. I don't know. AVGO, Broadcom, we have earnings again on March 4th, Wednesday PM. I did take a trade on this. Actually, I initiated on Monday. I held through Tuesday, gapped up against me on Wednesday, and I took an L. Not funny, actually, which is pretty annoying. But overall, the trade is doing what I wanted it to do. I hit my targets. At work, I failed to move my stop loss up for profit. Meta, not advantageous to be in, chopping around. Netflix is interesting. What I will do on Netflix, we have a catalyst. Warner Brothers, Netflix said they are not going to bid up on Warner Brothers, so this is obviously good, as Warner Brothers actually hasn't made money ever anyways. I don't know about ever, but it struggles overall. And so this is obviously a market views this as a good thing. What I would do if I were you is set an anchor VWAP. I already did. My yellow is my news anchor VWAP, so you want to see how this respects. I'm going to treat this as like an earnings gap. So I'm going to let this digest after moving 13% in one day, but also over the course of 4 days straight up of 30%. If we get a gap up actually to the 200 EMA to the $100 to 103 level, I would be interested in a short-term short based off of the extension, but overall, this looks like it's about to turn around. So Netflix is interesting this week. Tesla, not interesting. Just chopping around. Google, in range. It's okay. I'm not interested. Not advantageous to be there. CrowdStrike continues to get hit. Lower lows and lower highs. It continues downtrend. I would look for shorts on potential pops. Now, ServiceNow is just consolidating. It's coming up to 21 EMA, but there's nothing to do here until it breaks that range. Palantir, ranging, nothing to do. It's got downtrending EMAs. It's got potential supply within this 145 to 150 area. Not interesting, nothing to do. Same thing with Hood. Ranging has the downtrending 21 EMA. Could it get a gap fill here? Yeah, it could, but is it advantageous to be here right now? I don't think it is. You want to be in names that are pretty easy. This is hard money right now, in my opinion. You want easy money. Micron, this looks like it's starting to gas out a little bit. It's starting to struggle. If you are a trend line person here, you can have that trend line there, broke that trend line. Maybe, what really needs to happen here is it needs to break this 441 area. It's holding and respecting the 21 again. Maybe it comes down to this prior support area here, and you can set an alert to maybe set up a trade and risk against that area. But overall, it's not advantageous to be here, in my opinion. AMD This is an area of supply and demand, an area of demand interest. You can see that it continues to hold there. It's by the 200 EMA, but overall, look, it's in a huge range. So if you're a range trader, have at it. I'm not advantageous to be here. TSM, it's creating higher highs and higher lows. We just need to look for an area to risk against. So TSM looks pretty interesting. If you can, this demand area here versus this higher low, plus the confluence of the 21 EMA, I do think 361.50 to 358 area is an interesting area to risk against with a stop loss around 355. Keep it nice and tight. So looking for a pullback buy around this area. We might get that on Monday, depending on how the markets gap down or up or whatever way they want to gap. Oracle looks weak. This is hard money if you're trying to go long, in my opinion. If anything, it looks like a short. Adobe chopping around, coming up to the 21 EMA. This could, if you zoom out, look where it held support prior, right? So we should not be shocked. This is the prior demand zone back in February of 2019. It came back to this area. So it's kind of chopping around here. Maybe it finds some support. Either way, not advantageous to be in. Coin, just like Bitcoin, I'm tracking this name for Bitcoin price movements. It broke these high. It's retesting it now. Ideally, it holds. If it doesn't hold, we're looking at it at probably 150 on a retest here. Looks interesting overall, but it's still downtrending, right? Still downtrending. 50 EMA is down, 20 EMA is down, the 200 EMA is down. You have a death cross over here if you care about that stuff. But what happened after it happened? It continues to downtrend. So it is at a prior area of support, so it's a level of interest. I would be potentially, if you get another pullback to this area, maybe set an alert, let you know that, hey, it's in this area, and you can set up a small risk reward situation. MSTR, same thing. It's just ranging. Bitcoin goes down, this goes down. IBM got crushed. I was looking for a short within this area, within this big red bar, really the 50%. It retraced pretty more than I anticipated, which is fine. But overall, you have a 30% move to the downside. I was looking for a bounce. It tagged at 8 EMA and then continued on down. It closed at its highs on Friday, but overall, it found support in a prior area of demand. We'll see what actually happens here. Not advantageous. You missed the move. LMT, now we're starting to get to names that are advantageous to be in. LMT, nice base, breaking out, holding these highs. It's respecting the short-term EMAs. We had a nice little undercut of these levels here, undercut of the lows from February the 13th, and now it's back in range. It looks like it's going to push higher. It looks pretty decent. What I would do if I were you, if you're looking for a trade, set an area here. You can potentially buy the breakout, or if you want to go look at a shorter time frame here, you can easily see that's an area of supply. Maybe this gap here, if you wanted to buy against that gap on the shorter time frame, you just have to be mindful. It's not a true gap, right? There's price here. It's not a true gap. So just be mindful of that. But you're looking for something to risk against this low and a pullback within this area. So LMT looks pretty solid to move forward. Let's go NOC. Zoom out here. We have it's pullback to the 20 EMA, pullback to the 21 EMA, pullback to the 21 EMA, right? Each time it hits this area close to the 21 EMA, it bounces. So what I would do, what I did, is I actually set an area of interest, this little, basically this bottoming tail and then the retest area. If it comes back into this, I think this could be a potentially good buy spot to risk against this low for continuation up on the daily. So this looks pretty strong. GE looks pretty good as well. I do have a trade idea on GE. It's getting tight over the last few trading days. We look for a break of, you can say this triangle here, and we see if we get some continuation out of it. We have higher lows but lower highs, so it is compressing. I'd be interested in a break of the 344 area, or If it goes the other way, I'd be interested in this area here of 332 to 330 and risking against this low of 330.76. So this area would be an interesting area to buy in. Again, it would be close to 21 EMA. So you could have a nice entry there. RTX looks solid, but it's just ranging. I think it moves just when, I'm not sure. ExxonMobil, I'm in this from Wednesday. It did not take my stop out on Thursday. So I'm in nice profit. We have a nice little volume pump, probably because anticipation of news over the weekend. I am anticipating a gap up. If you look, last time we attacked Iran, it was on June 22nd, right here, June 22nd, which was a Sunday. Monday, we opened up. How many percent? Let's see, educated guess here. Opened up 2% and then sold off. So I will. The difference is that we did not break out yet. It was still in a huge chop zone. Now we're broken out. So there is a nuance there. So, but either way, I'm expecting a gap up and then a little bit of sell off. So I will probably just take my gains and see what happens. I'll probably just wait for the 15 minutes to open up and set my stop loss at the low of that first 15 minutes. And then whatever happens, happens. We shall see though. Maybe it even gaps down. Who knows? But either way, Exxon, if you want to look at the weekly looks pretty solid as well. Uptrending, couple of days of selling. Now we get some more volume going into a green, pretty strong candle there. So looking for continuation. CVX oil, look for the breakout over these highs here or a pullback to the low of this range. That looks pretty good. Halliburton, breaking out, holding these highs, which was obvious supply area. Now it has a nice bottoming tail on Friday. We have the news. This looks like it's going to move. VLO also just ranging, but it's getting tight. It's an inside day on Friday versus Thursday. Looks like it's going to pop. MPC, a beautiful bottoming tail, retest of this 191 to 190 area. Nice undercut of these lows as well, of the last 1, 2, 3, so Tuesday's lows. It held Mondays, so a nice move there, and it looks like it wants to head higher. LNG, kind of sloppy, honestly. It's within this sloppy, choppy mess. Not interested. KMI, base, breakout into highs, time corrected back to the 8 EMA. Everything is trend tracking. The trend is your friend until it bends in the end. This looks good. I would look for an entry and a pullback somewhere within this like 32 to, this $32 area where all these bottoming tails are. You look for somewhere to risk against that. UPS looks solid. I actually really like UPS specifically because it pulled back, consolidation, and then this right here, Wednesday, it undercut all of these lows and then it rallied. And so it, the thought is you have stop losses here. You run those lows. A lot of people have the stop loss specifically within this Friday low. It ran it and then collected all of the weak, quote unquote, weak hands, and then it got back within range. Now it's staying in range, but anything pulling back, I think to the 113 dollar area to risk the low of 112.95. You can put it at 112.94. Might be a pretty decent entry area for a retest of these prior highs, and heck, maybe even a breakout in a couple of weeks. Overall, though, this anchor VWAP from this high, it is continuing to act as supply. So looking at the short-term time frame here, obvious area of supply here, anchor VWAP from the high, obvious area of supply. I do have an anchor VWAP from this low, from this undercut low. It's respecting it, right? So we have an anchor VWAP pinch set up here. If you are interested in that kind of stuff, UPS looks great for continuation, in my opinion, this week. It just kind of depends on what happens with news-wise. FDX, FedEx, similar. Has a lot of supply here. It continues to fail this. I do think an undercut of these lows of like 380 would be good for a reset, and then we break higher. And then CME looks solid. Break out of this time correction to the 8 EMA, pulls back, retests, and then now it's pushing higher. If you want to look at the weekly has a beautiful multi-month base, and we got a breakout. So, all right, that is that for the week. Again, areas to be interested in are the defense sector and energy. Tech is not the place to be. UPS also looks pretty solid. Look at the weekly, nice bottom tail, undercut there, and then kind of a reversal hammer there. So, yep, those are places to be in. Trade well, manage your risk, and oh, wait a minute. Economic calendar, Monday, ISM, PMI, services PMI, non-farm rolls, retail sales, unemployment rate on Friday. So Monday, Wednesday, and Friday. And then we also have earnings. CRDO, if you trade that, that's on Monday after the close. But the big guys are CrowdStrike and then Broadcom. They are also this week. So CrowdStrike Tuesday PM, and then also Broadcom Wednesday PM. Marvel and then Costco are Thursday PM as well. All right, trade well, manage your risk, execute your plans, and like, comment, subscribe, share, follow me on X, all the good stuff. I appreciate it all. Later.